Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. Today, we are going to be talking about this week's big news, especially if you are in or around Findlay, Ohio. And that news is that Cooper Tire and Rubber Company, with its global headquarters and one of its tire plants located here in Findlay, will be bought by Goodyear Tire and Rubber
Based
Company.
on the agreement and the stock price movement, I think it will be a good year for them.
Yeah, I see what you did there. We'll get to the stock price reactions in a little bit. But yeah, let's kind of just 50,000 feet like we usually do. Start up there. What does Cooper Tire and Rubber Company do?
Well, it's hard to tell by the name. It's
I know,
one of those
it's
confusing
cryptic.
ones.
It's cryptic.
But they do make tires for vehicles.
It's probably rubber.
And it's out of rubber.
Yeah, okay.
Surprisingly. Yes.
Yeah, so let's do a little history lesson. So if you're not familiar with Cooper, you're going to be familiar with Cooper right before they get bought. So they are headquartered in Findlay, Ohio, which is where we're recording this. So we obviously know the company pretty well. But let's go back before Josh was even born, the early 1900s. So there were two guys named John Schaefer and Claude Hart. These were brothers-in-law. So Jordan, if you're listening and we want to start a business like a tire company,
There you go.
brother-in-laws, brothers-in-law, I don't know which way
out.
to say that. It can work. But anyway, they bought this company called M&M Manufacturing Company in Akron, Ohio in 1914, and I don't think they made M&Ms.
M&M manufacturer. M&M is really like
M&M.
triple
3M.
It's
3M.
That's the company. I guess.
Bet that's not it. But
That's
anyway,
not it.
M&M. They bought it in 1914. This company did not make tires. They made tire patches, tire cement, and repair kits for tires. So they were like in the industry, but not quite there. The next year, 1915, they bought Giant Tire and Rubber Company. So they only made large tires,
Apparently.
like really large,
Monster truck tire.
like in 1915. But
Monster.
actually, I have no idea what kind of tires they made, but that was the tire company name. And actually, they didn't actually make tires. They were a tire rebuilder. So like they would take bad tires and repair them, fix them, and sell them again. And actually, especially today in like terms of semi-tires, bus tires, happens all the time.
Yep.
Your run-of-the-mill passenger tires does not happen. It's not safe. But you do retreading when you go to big tires.
Oh, interesting.
Yeah, really big tires. I'm sure like tractor tires are the same way. There's just so much tire there.
You just retread them.
Yeah. So anyway, that is a little knowledge nugget for you there. So 2 years later, now we're up to 1917, they moved their operations to Findlay, Ohio. And in that same year, Ira Cooper joined Giant's board of directors. So Giant, the company we just talked about, their board of directors. But then he started his own company called the Cooper Corporation. And they began making tires in 1920.
Okay.
So throughout the 20s, there was a lot of consolidation in the industry, which we're kind of seeing. It's the 20s and we're seeing consolidation in the industry.
History repeats itself.
Man, it's craziness. But in 1930, Cooper and Giant merged with another company called Falls Rubber Company, which was really small, but I had to note it. And then the company Master Tire and Rubber Company was formed in 1930. Well, Ira Cooper died in 1941, but that company went on to be very instrumental in the U.S. supply chain as it pertained to supplying tires, pontoons, life jackets, even tank decoys during World War II. And after World War II, I don't know if this is in remembrance of him or whatever, but the company was renamed Cooper Tire and Rubber Company, even though he was no longer there.
Yep.
So,
Which is always crazy to think how a lot of these factories did repurpose their whole manufacturing for the war effort, which is just crazy. So it's been here in Findlay, Ohio for over a century.
Over a century. In fact, I used to work at Cooper Tire.
Okay.
So I started my career there actually in late 2013 when I was wrapping up college, and first couple real people jobs are there, and that's kind of how I got to know finance because I worked in finance there.
Yep.
Well, I was there when they celebrated their centennial or whatever.
Oh, yeah.
Which was pretty cool.
Yeah.
So anyway, it was a good place to start my career and helped me kind of get to where I am to be able to do this for you guys today. But anyway, Cooper Tire was one of the most instrumental and influential companies in building Findlay as we know it.
Yes.
So, I mean, think back 100 years. Thousands and thousands and thousands and thousands of people have been employed either directly or indirectly by Cooper Tire and the jobs that, they provided, whether that be in the headquarters, which is here in Findlay, or the Findlay Tire plant. That's huge. Those are millions and millions and millions and maybe billions of dollars into the economy over the last 100 years.
Yep.
So Findlay has a soft spot for Cooper. So that's why it's noteworthy today that we put this episode out right away so that that our listeners can kind of get an idea of that. Yep. This is such a somber feeling episode.
It is. And like for me, both my family and actually my wife's family, there's history at Cooper as well. And growing up on my mom's side, there was generations there that worked at Cooper and were very instrumental in pieces of that Cooper. So that legacy, whenever you drive by the factory, you're like, oh yeah, that's
right.
There's history there, which is, we heard the news this morning. We're recording this Monday morning,
right,
when the news came out. So just trying to think through it, and we're going to talk through what that means as we go through it.
Yeah, so let's kind of break down the deal, because there is a deal.
There is a deal.
And we're going to link an article with a lot of these details in the show notes. And this is an article from CNBC. It's reliable. It's got the details. So as of this morning, also at the same time the earnings were released, they kind of put it all out at the same time. Goodyear said it would buy Cooper Tire and Rubber Company in a $2.8 billion deal. Sounds like a lot of money.
That's a lot of money.
In fact, it's 20-some% over what Cooper was trading at in terms of market cap by itself on Friday. And really, if you think about the intention of this is so that Goodyear can get some of the good things that Cooper has going for it that it envies. It wants those things. Mm-hmm. And so, namely, what that is the light truck and SUV tires. So Cooper has a really good line. Their Discoverer line is their most famous, and I've had those on vehicles before. They're great tires. But the people love those tires, and they do very well. And generally speaking, the bigger the tire you make, the more profit margin you have.
Oh, really?
So it's a very high margin business in terms of tire margins. Like, tire margins are not high when you compare them to like software margins, but for what they are, truck tires have pretty good margins. So Goodyear wanted to get in on the truck tire side of the business, which is they have theirs, but they're not as well known, they're not as well respected, and it's just really good business to buy because it makes a lot of money. Mm-hmm. So also, North America is obviously where a lot of this is taking place. Goodyear's headquartered in Akron, Findlay's where Cooper is headquartered. What Goodyear has differences in is China. So Cooper has 2 plants in China, and they make a lot of tires and sell a lot of tires over there, and they ship them all over the world from there because it's a low-cost manufacturer. Yep. And Goodyear wanted access to that as well. So they get a couple benefits from that. So how did the stock prices perform, Josh?
Well, like I mentioned, it's a good year.
It's a good year.
It's a good day, I guess.
It's a good day, yeah.
So you mentioned $2.8 billion was the deal.
Mm-hmm.
And how that breaks down is there's a number of shares out there in the market, and your price per share, when you add all those up, that's what we call the market cap. So that's the worth or the value of the company. So if you have 100 shares and they're trading for $5 a piece, that's $500 market cap.
Yep.
That's just rough, that's how it works.
Exactly.
So $2.8 billion deal actually meant that Goodyear's paying more than what it's currently valued at.
Substantially. Or than it was on Friday.
Right. And so Goodyear's saying, hey, you're worth $2.8 billion. We'll buy you for that. Even though maybe they were trading for less. In fact, it ended up being about 30% less.
Yeah.
Or the stock market or the trade went 30% higher than what it was priced at on Friday. So there's a premium that they're paying for, like you mentioned, those high margin SUVs and truck tires. There's the Exposure International. So they're paying a premium. And so for Cooper Tire, if you own those stock shares, you're getting a benefit. They're saying, hey, these shares are actually worth higher than they're trading for right now. So what we saw today was the stock price went up.
Yeah. Or essentially they're worth more to Cooper than they are to the market.
Yes, right.
So
Cooper,
they're not worth more to Cooper. I keep getting the names. They're worth more to Goodyear than they were on Friday in the market.
Yes,
by about 30%.
So then the market reacts and moves it up, saying, okay, if you're willing to pay this, then the price will.
Because they're pretty close now, trading to where the actual execution price is. So
with that,
it's not actually uncommon for acquisitions.
Right.
So the buyee, the one getting a purchase, the acquiree, it generally gaps up at around to where the announced pricing will be if that's available.
Yep. There's a whole thing called arbitrage. It's those differences. And long story short, if you're going to be bought out and a company wants you can probably negotiate and have some sort of premium to, hey, if you want us for future business, here's what you're going to have to pay for. Not unusual, like you said. Now, also, Goodyear stock is also up as well.
And they weren't. This morning they were down, but now they're up like
recovered
15% or something like that.
And so part of that probably is the reaction to, as people, again, this announcement happened this morning, and so people digested the news and kind of thought through it and said, okay, what is Goodyear getting this? Are they overpaying for what they're getting? And the reaction, at least this afternoon, seems to be people are happy with this. Stock traders are saying, I'm willing to own Goodyear or buy more of it because I think the value long term is worth what they're getting. So both actually are up today as of right now when we're recording. And that, again, just shows that both sides are happy with this deal.
Yeah. So to put a couple more details in there. So the deal nearly doubles Goodyear's presence in China. And another thing it does for the Cooper branded tires that they're, hoping to make good money on is it nearly it broadens that distribution for these Cooper tires through, because Goodyear is a much bigger company than Cooper, and they have a network of around 2,500 retail stores in the country. So a lot more places to sell the tires, which as competitors, they would not have wanted to sell those tires.
Right.
But now it's all one company
and stock them, and
they're going to promote them and like crazy. So,
and especially like you said, if I'm a Goodyear store and someone comes and says, "Hey, I got a truck, I want to put some tires on." If you can hold these Cooper tires, which are
it's a good
tire, and they're real popular, you may get that sale instead of them going elsewhere looking for a different tire. So you're happy to put them in there now.
So I guess to note, U.S. and China are the two largest tire markets in the world. And they account for about 1/3 of the global industry volume. And actually, if you take a step back, think about I was talking to a friend about this today. What are the antitrust litigation potential issues with this? I think rather limited because Cooper's not that big.
Goodyear's fifth or sixth.
Yeah, Goodyear's a good bit bigger. But even combined, they're not going to touch the top two. And it's actually going to benefit the United States focus of the company, especially.
So what are the top tire?
So the number one is Bridgestone. So Bridgestone's a Japanese company. Okay. Number two is
tires you've seen in those are like race. You see those a lot of like race cars and stuff.
They're on everything. They're on a lot of things. Number two is Michelin, French company.
Yep.
Great
the
tires.
Tire guy that looks
that looks like the Michelin Man.
Yep,
kind of.
Looks like the Stay Puft guy from.
That's what I was. Yeah, I was like, he looks like the Michelin Man. How else do you describe? How else do you describe that?
The giant marshmallow guy.
And I think, I think there's some other like Hankook is getting up there in terms of market cap, but I think that Cooper or Goodyear's probably in the 3-4 range from there. Okay. So anyway, even with Cooper, they're still not going to be at the number one or two in the world. So yeah, that's kind of a little bit of perspective there. Another benefit is that Cooper hasn't really broke into the OEM tire business, original equipment manufacturer tire business, as much as they would have wanted. It's very hard.
That means when I go to the dealership, the tires that are on there.
Correct. Yeah. So you OEM. Go buy a brand new Jeep.
Yep.
And the tires that are on your Jeep when it's new is the OEM tire. Yep. And a lot of people, you know what they do when
I want the same tire.
They drive their car. It's great.
Give me another one.
Need new tires? They go to the dealer and they say, I want the exact same tires. So it's kind of like a revolving business, which is why it's a very lucrative business to get into. But Cooper, because of it's very hard to get those deals.
Yeah.
And you have to have a lot of volume and some very specific supply chain and manufacturing operations to meet these certain demands. And it was hard to get into. They had gotten into a couple, I think with Mercedes actually, Cooper did. But it's really hard to break into it. But if you look at Goodyear's come on all kinds of vehicles, especially here in the States that we're seeing. So that's a benefit that they're going to be able to have is, hey, now this is our company. We can kind of tweak some of these manufacturing operations or whatever, and let's throw these Coopers on these OEM vehicles. It's going to be great. So, obviously, 2020 was rough.
Yes.
People, especially early in the year, unemployed, not buying tires, not buying cars. But as the year wore on, that flipped.
Yeah.
The light switch flipped. There was a lot of money in the economy all of a sudden, and if you had a job, you're going and buying all kinds of stuff.
Yep.
So, tire prices went up. Tire manufacturer stock prices went up, and Cooper's trailing 1 year return. This is before COVID even. Over 100%.
Wow.
As of today. And like, sure, you're getting a good premium today, but before that, it was still like 80.
Yep.
So the stock price was very strong there. And we're expecting continued strength of that boom in terms of people buying cars, buying tires to continue here in 2021 as people go out. The economies continue to reopen and do those things. It's going to be great. More stimulus is going to be good for people buying tires. I think everyone's going to win in that. So there are some more benefits to Cooper being purchased by Goodyear in terms of cost savings for the combined company. So those are called synergies. And within 2 years after the deal closes, Goodyear expects around $165 million in savings, which is a lot. So Goodyear shareholders are going to own about 84% of the combined company. Cooper shareholders are going to then own the remaining 16. So it's going to be through stock, a lot of it, but it's also going to be through cash and even debt financing. And here's the kicker. The company's headquarters for the combined entity is going to not be in Findlay, Ohio, which shouldn't be that surprising, but it's going to be in Akron, where the main headquarters for Goodyear is. And that's something that we'll talk about some implications.
Well, if we go back to your history, that's where it started.
That is it's homecoming.
But you're right. Just talking from a high level, and I know we'll get to this in a little bit, but there's been rumors and attempts in the past for mergers or buyouts and stuff. And so for this to happen for another Ohio tire company in the U.S., I mean, that's probably the best scenario from that standpoint, from a, historical standpoint, thinking where it came from, an Ohio tire dealer being bought out by another Ohio dealer, better than overseas or something like that, I would say. Which was one of the things that we'll talk about that almost happened years ago. All right, well, before we do that, though, I got a joke for you. And since we're talking about tires in cars.
And we can't use your favorite joke.
No, I can't use my favorite joke.
But we're going to say it anyway.
Second favorite
No,
joke.
we're going to say your favorite anyway.
Joke. Okay.
And then we'll come back.
Why couldn't the motorcycle make it up the hill?
Oh, I don't know, Josh. Why?
Because it was too tired.
Oh, that's funny. Hey, Cooper makes motorcycle tires, speaking through its Avon brand, and I had some of those.
Wait, isn't that the makeup company?
I know. I always thought that when I first started, I was like, that is so funny. That is a makeup brand.
Who had it first?
Anyway, Josh, your fresh dad joke.
Fresh dad joke. I just got my foot run over by a rental car.
Okay.
It hurts. Hurts.
At Hertz.
Yeah.
That's funny.
Which is a rental car company. That's why it's funny.
So as Josh mentioned, this has happened before, this discussion. And in fact, I think it's gotten this far and then fell apart. So in about 2012, 2013, I believe was the last takeover attempt, an Indian company called Apollo.
Yep, they did the moon landing. Yep.
Yeah, the moon landing. They, wasn't that a boxer too? Apollo Creed?
Yes.
Okay, yeah.
Fictional, yeah.
He's fake?
I'm thinking he is.
Oh, dang. Well, he died in the movies.
That's sad.
So anyway, Indian company called Apollo bid and won to buy Cooper Tire around that time as well. And it actually fizzled out because once, the deal was all struck and everyone was happy, there were some things that Apollo found out that they were not necessarily thrilled about. So that deal fell apart. And then since then, in the years that I was there and after, there have been constant rumors floating around of someone coming in town, having meetings with executives about buying it out. And, that's been everywhere from Goodyear to Hankook to all kinds of companies. And it's never really come to fruition until today.
Yep.
Again.
And again, where Cooper sat being sixth, right there, kind of, they were that kind of ideal target. Is they did some stuff, specialized in certain pieces. They were a great add-on, but they weren't quite big enough to be the one acquiring. Yeah, it was just kind of that weird spot.
They weren't going to move up the food chain in by themselves because it takes money to buy.
Yep.
And what's lower is probably stuff they didn't want anyway, or they had already bought it. Like they had acquired companies like Mickey Thompson and things like that, which are smaller companies, niche companies on their own. So at this point, we have every reason to believe that this deal will go through around the middle of the year this year. That is when things are looking to happen. We have no reason to believe it won't, but that's what everyone thought, almost a decade ago now. So we'll have to see. So, Josh, let's just have a discussion.
Yes.
What does this mean for Cooper and maybe the combined company in general?
Okay. Yeah, so a merged company means that, like you mentioned, there's some synergy, which I think is a funny word anyways.
Yeah.
But you add the benefit of a larger company with workflows and all the stuff that they've learned, so there's an enhancement there.
Yep.
It also means, though, that you have redundancy. So we have a person for that job. You have a person for that job. Do we need 2 people for that job? I don't know. And so there will be some adjustments along the way. And moving to Akron, Ohio means there'll be some adjustments from that standpoint. Mm-hmm. But for the company, what it means, though, is you now have stronger resistance to other companies outside there.
Oh, yeah.
Cooper by itself is not as strong as Cooper merged with another larger company.
And for that matter, Goodyear the same way.
Goodyear's the same way. Yeah, adding in Cooper provides that catalyst to help propel them forward in growth. Yep.
Yeah, and I guess so to kind of build on your financials that you were just talking about, those synergies, if you on paper, before you mention those things, you just can add up income statement of Goodyear, income statement of Cooper, all things are staying the same. That is how much money will become earnings. Great. Well, when you start looking at some of those puts and takes and things that actually could become more efficient, you could leverage yourself a little bit with the resources that you have. You actually should be more profitable as a larger company.
Yep.
And with that, what's called mix in the business, the tire business, is those high, mix is the what makes up what of what you're selling. Well, the more of the high margin truck tires specifically that you're selling, the higher your overall margins are going to be because you have favorable mix, and that's something that's going to be enhanced as well for the combined company there.
What about Findlay?
Yeah.
What do you think it matters for Findlay?
Well, it's still early, so we'll put that out there. We don't really know, and they've really been kind of hush-hush on the details. We're telling you everything that's really out there right now. What we do know is, as Josh said, and I had mentioned earlier, the headquarters will be moving to Akron. And that will, it's not moving actually. That's
their headquarters.
That is already the headquarters of Goodyear. Mm-hmm. So I would imagine that there will be, like Josh said, some adjustments in terms of the Cooper headquarters in Findlay probably performs a lot of the same marketing and finance jobs and those kind of things that may be already duplicated elsewhere. So I don't know for sure, but there could be some organization shuffling is what they'll probably call it. I believe that the Findlay plant, as far as that goes, employs a couple thousand people. It's a great provider for a lot of people. Because they make a lot of those light truck tires, probably will continue for a while to do what it does, which is good, and it does it well. Although longer term, specifically having worked in that plant, it is the least efficient because that plant it was built and then it was added on and added on and added on and added on for 100 years. It's not necessarily the most efficient process wise. So that may change over time, but at least for now, I would imagine that it's going to remain making light truck tires and enhance the overall product. But I think the biggest discussion that we're going to keep an eye on in Findlay is the labor piece. Yeah. And specifically for a while, it's going to be the white collar labor piece, coming out of those people coming into the office. Because just a few months ago, we had some layoffs at Marathon, and that took some people out of the Findlay workforce that were contributors to the economy in a big way. Now we're seeing that from Cooper as well. So as a local person, obviously we want more people working and making more money. And there's been a couple speed bumps, I think, in that this year. And small businesses are going to look a little bit different coming out of COVID anyway. Yep. But you throw on a couple of these things on top of it. And I think that Findlay's going to look a little bit different. It's going to have a little different vibe, I think, in a little bit. But a lot of these things we're not going to know for a while.
Correct.
Any other thoughts from you on that?
Yeah, I mean, like you said, it's a staple in that, it provides a job, an income, a wage that, for a factory worker there at Cooper is a good paying job. Yeah. And so that's the big worry is, with the upper level executives, whether they're here, Akron or what, they're probably figure that out. But for the average employee there, that's just part of the union going to work every day. What will that look like for them?
Right.
There's like you said, there's the hope that the plant is needed within this whole. I don't think Goodyear can just absorb all the tire needs that they, Cooper was fulfilling and just fill it in their plants. But you're right, there may be some adjustments or changes. And hopefully, like you said, ideally for Findlay is that this plant continues to operate and it continues to have good, well-paying jobs.
Yeah. And I guess, for all of our listeners, maybe you're impacted by this. This is just an opportunity to start to look at some of the things that we've talked about over the last 60-some episodes, and see if there are some ways that you need to
starting
look
with
at your
emergency
money.
fund.
Exactly.
That's the key. Is these are the uncertainties that the emergency fund is in place for. Is what if I have a disruption in my income? What does that mean? And so that's there. So finally, stock price. We talked about it going up, right? We're not going to get away from that. Stock price for Cooper and Goodyear, we're up. You know what I say. So is now a good time to invest? You know my answer.
It depends.
Well, actually, I'm going to change it today.
Yes, always.
Tread lightly is what I'm going to say.
Oh,
see what I did? See what I did?
Tread lightly.
It's the same. It really does. It does it fit in your diversified portfolio?
Right.
Maybe. Is there a reason to own a tire company? Are you optimistic about the industry? Then that's fine. But just understand that this is also why we're very hesitant about owning too much of the company you work for.
Right.
Because there could be, and again, the stock price is up. It's a good thing, but there could be a disruption that you're not planning for, that if you have too much weighting in the company you work for, you may be all excited about the company, but there may be something that happens that causes your long-term plans to be disrupted.
Yeah, I think, when it comes to specifically the two stocks, you've got Cooper stock, you've got Goodyear stock. Goodyear stock being the acquirer, they are in this more for the long run. And that is something that, should the deal go through as is planned, would be maybe a better long-term thinking. Where's the company go in 5 and 10 and 20 years, where if this deal goes through, Cooper stock's literally going to be gone. But what I see is, looking at the stock price today, being up right at the deal price, there's nowhere for the stock to go.
Yeah.
Buying Cooper stock today is you're not going to have any upside, because if you hold it through the deal, you get the exercise price, which is about where it's trading today, and maybe you got a dividend in the middle, but really nothing. Where Goodyear's the stock that you're going to have afterwards.
And if the deal falls through, then the price is priced higher than what the market was valuing Cooper at, so there could be a downward.
And I'm sure that was what happened in 12 and 13 when that deal was announced as well.
Yep.
So I think, what's a more risky pick right now? I'd say buying Cooper at $54 a share seems to have less upside than buying Goodyear. Now, I'm not saying go buy either of these stocks.
Right.
Talk to your advisor. It's different for everyone. But I would say that being where the stocks are being traded right now, actually both of them spiking pretty substantially, means the entry point might not be ideal for either of them in the short term. So that is Cooper and Goodyear. We're not making light of it. This was kind of a tougher episode to do. Being, I have a connection at Cooper. Yep. Your family has a connection at Cooper. The Findlay community has a connection at Cooper. But we just thought it was pertinent to talk about in real time as this was happening. So if you have any questions, don't hesitate to reach out.
Yeah, shoot us an email, hello@theinvesteddads.com. Again, we just know the information has been released. It just comes straight from publicly disseminated information. We don't have any insider on that. But if we hear anything, if we know, we'd love to talk to you about it if you have concerns or thoughts. But again, from our standpoint, the bigger picture is, how can you better prepare your financial situation that these type of events don't cause a disruption?
As always, check out our free gift to you. It's a brief list of 8 principles of timeless investing. These are overarching investment themes meant to keep you on track to meet your long-term goals. We do not talk about tires at all. So, sorry to burst your bubble there. Check it out. It's free on our website. Josh, how can people help us grow this podcast?
Yep, make sure you subscribe. Every Thursday we release a new episode, so you'll get that there if you subscribe. If you're on Apple Podcasts, leave us a review. It helps us rank higher so more people can find us. Like I mentioned, send us an email if you have any ideas, topics, suggestions, questions. hello@theinvesteddads.com. You can also get there from our website, theinvesteddads.com, if you want to. And if you know somebody that was asking questions about this merger or Cooper Tire, share this episode with them.
All right. Well, until next Thursday, have a great week.
Talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.